Divya, and I will explain briefly about the business plan of this project. So initially, the main idea is to suggest Caterpillar Company a new investment opportunity by setting up greenfield foreign direct investment by building a new manufacturing machinery in Portugal and to expand their company. The expansion of the company to Portugal allowed the company to diversify its core business, and still it has a bigger room for development and bigger market to serve. So let me tell you about Caterpillar Company first. According to Global Machinery Industry fact sheet, Caterpillar is the global Fortune 500 company. With 2019 sales and revenues of $53.8 billion, Caterpillar is the world's leading manufacturer of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotive. The company provides technology for construction, transportation, mining, forestry, energy, logistics, electronics, financing, and electric power generation. So, let us analyze some other external and internal factors of the company and also the opportunity and threat involving in expanding its business field. So, the quality of Caterpillar is the internal strategic factor. It has a high degree of consumer loyalty, and the organization with its devoted client relationship, the board division has ready to accomplish a significant level of customer loyalty among present clients and great brand value among the possible clients. And Caterpillar is moderately fruitful at execution of new ventures and created great profit for capital consumptions by building new income streams. The organization likewise has strong seller network. It has manufactured a culture among merchants and vendors where the vendors advance organization's items as well as put resources into preparing the business group to disclose to the client how he or she can extricate the greatest advantage out of the items. The primary shortcomings of Caterpillar is that Caterpillar needs to place more cash in innovation to incorporate the procedures no matter how you look at it. At the present time, the interest in advancement isn't at the standard with the vision of the organization. There are also holes in the item extent sold by the organization. This absence of decision can give another contender and a dependable balance in the market. It also has high weakening rate in work power contrast with different association in the business. Caterpillar has a higher whittling down rate and need to spend much more contrast with its rivals on preparing an advancement of its representative. So, moving on to opportunities. The new technology provides an opportunity to Caterpillar to practice in differentiated pricing strategy in new market. It will enable the firm to maintain its loyal customer with great service and attract more new customers through other value-oriented propositions. Stable free income gives another chance to put resources into adjoining item portions. With more money in the bank, the organization can put resources into advances just as in new item portions. This should be a lucky opening for Caterpillar in other item classification. By diminishing the expense of transportation in view of lower dispatching costs can likewise cut down the expense of Caterpillar's items. In this manner, it will give a chance to the organization either to help its gainfulness or give the advantage to the clients to pick up a piece of pie. The first trait of Caterpillar is the intense competition. Stable profitability has increased the number of players in the industry over the last 2 years, which has put downward pressure on not only profitability but also on overall sales. Liability laws in different countries are different. and Caterpillar may be exposed to various liability claims given change in policies in those markets. As the company is operating in numerous countries, it is exposed to currency fluctuation, especially given the volatile political climate in a number of markets across the world. The rising pay level, especially movements such as $15 an hour and increasing prices in the China, can lead to serious pressure on profitability of the Caterpillar. So, moving on to the next point, foreign direct investment restrictions. In Portugal country, the shape of foreign investment that's a lot of common and has been growing is that the foreign direct investment. In more specific, a non-resident individual or a corporation who invests a minimum of 10% in a Portuguese company's capital and participate within the higher cognitive process of that company may be a direct investor. In compliance with the FDI regulatory restrictness index created by Portugal, had the second less restrictive foreign investment regime in 2014. This implies that the Portuguese policy in this regard is one in all the most open direct investors of all the 62 countries lined by this index. Over the last years, in keeping with Portuguese Investment and Promotion Agency, FDI has been growing well, which implies that the investors are reacting well to the efforts. In 2017, in keeping with a study conducted by Ernst & Young, Portugal country was able to capture the largest price of FDI of the last 20 years. In essence, Portugal country has associated appealing economy associated an open attitude towards FDI, which implies that it's quite engaging to invest in Portuguese firms during an immense range of business areas, and moreover, it's extremely inspired by Portuguese government. Hence, the new establishment of Greenfield Direct Investment will give an opportunity to Caterpillar to expand their business and increase their revenue in the future. That's all from me. Thank you.
Our target market is Portugal. Portugal is one of the most prosperous countries in the world with a high standard of living for its residents. It also has one of the youngest employees in the world, and in terms of business, operating a company in Portugal does not cost a ton of money. Investing in Portugal may be one of the best investment decisions to make. The Portugal population is around 10.19 million of people living, and attracting foreign investment has been a priority due to the aftermath of the 2008 financial crisis, as well as the constraints of its relatively small domestic market. The economy of Portugal introduced several elements that make Portugal an increasingly attractive and competitive country. It complies with the FDI regulatory restrictiveness index made by OECD. Portugal has the second less restrictive foreign investment regime in 2014. This means that the Portuguese policy in this regard is one of the most open to direct investors of all the 62 countries covered by this index. The reason we choose Portugal as our target market is they have a good position in Europe and proximity to some of the most important markets in the European Union. Portugal maintains a good trade relation not only with UE countries but also with the United States, Brazil, or African countries. The second reason is Portugal workforce is highly skilled and the cost of hiring employees are lower than in other countries. This could be an important advantage for those investors who are interested in opening a startup business with Portugal. The country also has a talented pool of young workers in fields such as engineering and business. It also has a well-developed transport infrastructure and ICT network. The quality of highway, network and air transport, which offer a frequent direct flight to major business centers around the world, are important factors to the growth of the investment. And the last is Portugal. Business environment is attractive to entrepreneurs in all business fields. And the important advantage is an openness to foreign investors and foreign employees. Moreover, the advantage of tax structure of Portugal is another reason why we choose Portugal for business. Location to setting up our company is in Gondomar, Portugal. Portugal is a good place for business service because Portugal economic growth, which is higher than the European average today, encourage the development of new market and the creation of successful companies. The country now has first-class system for business creation and property registration. According to the International Institute Global Peace Index, Portugal has been one of the top 5 most secure countries in the world for almost 3 years. The Portuguese economy also has been improving for almost 3 years. Portugal turned the painful page on the crisis and was able to exit the excessive deficit procedure on 16 June 2017 and return to growth to 2.7%. For this reason, we recommend Portugal as a place to Caterpillar make an investment. So next is the current economy in the Portugal. Portugal gross domestic product fell to 3.9 in the fourth quarters of 2019 compared to the previous quarters. In the fourth quarters of 2019, the GDP figure was $59,468 million, which make Portugal is number 35 in the quarterly GDP ranking of the 50 countries. For the past 5 years, Portugal GDP growth experienced increasing and decreasing. From the diagram, we can see that from 2015 to 2016, there was an increase of 0.2% and rise again in 2017 by 1.5%. Nevertheless, in 2018, it decreased by 0.9% and in 2019, it dropped again to 2.2%. Economic growth seems to have deteriorated significantly by the end of the first quarters and even worse in the second quarters. Consumer and business trust hit multi-year lows in April, while recent survey data show that 80% of businesses saw a decrease in turnover, which led most companies to reduce workers. In the meantime, both Fitch Rating and S&P Global Rating have updated their outlooks to keep a stable state, while affirming their BBB rating respectively. Both rating agencies highlighted the effect of the pandemic may have on previously improving debt rates while highlighting the country's vulnerability to forward external shock. The economic downturn will be steep this year as a result of the coronavirus shock. Given the economic reliance on the tourism industry, exports will crumble due to the collapse of travel. Household consumption will plunge amid a jump in unemployment, and investment will decline to the continuing uncertainty. The market deterioration of fiscal position cloud the outlook. Focus Economic Analysts project GDP to contract 8.3% in 2020, which is down 0.6 percentage point from last month's forecast, and grow 5.4% in 2021.
Hello, my name is Abdullah bin Nasran. So today I'm going to present the law and regulation and competition of our FDI project. So in law and regulation, Portugal legal environment encourages foreign investment. The country has no foreign capital entry restriction, and Portugal law prohibit any discrimination between investment supported position. Currently, Portugal continues to be hierarchy number 1 within the trading across border ranking, an indicator that capture the time and price for the document preparation and compliance with border procedures to export and import merchandise. Firms cooperative in Portugal or aiming to enter the Portuguese market take into thought that the acquisition of a stake in a Portuguese company is a subject specific rules relating to speech act of the stake held or to some extent to the duty to launch a compulsory takeover. Most foreign investment in Portugal is unregulated, yet authorization is needed for investment in sensitive areas, specifically defense and alternative regulated areas like banking, media, and money service. But the bulk of need apply each to national and foreign investors. Foreign investors in Portugal should additionally take into thought European and national competition rules and alternative European policies. As a general rule, Portuguese law does not impose any specific restriction on foreign or foreign investment in company matters. Notably, rules on the incorporation of firms, mergers and acquisition, the everyday business activities, duties and liability of shareholder and administrator, merger management and just apply regardless of position. Without the above, some variation within the treatment of Portuguese and foreign entities do exist beneath Portuguese law, although exceptional, like the approach taken in reference to team of firms. The Portuguese framework on company team relies on the central ideas of an affiliated company that is deemed to exist upon the prevalence of lawfully outlined varieties of relationships between firms. It is vital to carry into thought that a number of the aspects of the legal framework on teams, and specifically the chance of supplying binding orders, and therefore the liability of the company only applicable if the registered offices of each firm's area situated in Portugal. So next, in competition of our FDI project, competitors of machinery industry are existed in Portugal, such as Adira SA, Arken, and Balflex. As for Adira SA, it is one of the main competitors that provide machinery service in Portugal. Adira SA is a global manufacturer and supplier of engineering solutions, specializing in the production of hydraulic, electric, and hybrid presses, guillotines, and robotic cells. With over 60 years of experience and customers in the four corners of the globe, they are able to respond efficiently to the most complex challenges, from the provision of a simple plate cutting and bending solution to the design and implementation of automated plate processing and storage system. Other than that, the competitor of machinery industry well known in Portugal is Arken. Arken has been serving the industry, providing reliable, efficient, and technological innovative solution in the field of mechanical process technology. Arken Family Businesses tells the story of an entrepreneurial firm that from its humble origins, its cubic meters of passion for excellence, and its huge volumes of hard work and dedication, became one of the leading manufacturers of concrete equipment, selling to more than 45 countries worldwide. The company has now grown to a group and is an acknowledged supplier of technically innovative, user-oriented products and services in areas such as concrete, precast, minerals, asphalt, and more recently port equipment with solutions for all kinds of cargo handling. To ensure proximity to the client and to face effectively global competition, Arken Group has a decentralized organization into other company units that were created and acquired along the years. So finally, as for Baflex, also known as machinery company that provide one of the most comprehensive range of hoses, fitting, flanks, adapters, and quick connectors. Hydraulics hoses are produced to Baflex specification and following the ISO 1436 SAE J517 and EN 8532 EN 857 standards. They cover a wide variety from low to very high pressure application in rubber, thermoplastic or PTFE, with textile and steel reinforcement for petroleum and water-based hydraulic fluids. Valve flex also following the terms of international standards, covering a wide variety of application with base chosen high quality grade polymers with synthetic fibers or steel wire reinforcement for a wide range of fluids and temperatures. So that is all about the law and regulation and competition of our FDI project. That is all from me now. Thank you.
Good evening everyone, my name is Radiana binti Araj. Today I would like to present the financial implication of our project. Firstly, I would like to explain the financial analysis of Caterpillar Company. Next, investment and financing, loan amortization, cash flow statement, and lastly, capital budgeting. Financial analysis. First of all, I would like to explain the liquidity ratio of Caterpillar. Firstly, the current ratio. Current ratio formula, it is current asset divided by current liability. As we can see, for 2017, Caterpillar have 1.34 current ratio and 1.36 in 2018 and 1.47 in 2019. As we know, the good current ratio, it is between 1.2 to 2.0, which is mean the next is quick ratio. The formula of quick ratio is current asset minus inventory divided by current liability. As we can see, Caterpillar have increasing quick ratio from 2017 to 2019. It is from 0.97 from 2017 to 1.04 2019. The more higher the quick ratio, the more safer the company. It is because the company had excess cash. Next is profitability ratio of Caterpillar. First is return on asset. As we can see, Caterpillar have increasing return on asset. It is 2% in 2017, 7.2% in 2018, and 7.7% in 2019. Caterpillar consider have a good return on asset. It is because the return on asset of Caterpillar have over 5%. Return on asset. As you can see, Caterpillar also have increasing return on asset. It is 2017 12%, 2018 40%, and 2019 42%. The good return on equity, it is from 15 to 20%. So we can see the Caterpillar have a good return on equity. Next is profit margin. Caterpillar also have increasing profit margin. It is 3.7% in 2017, 10% in 2018, and 33% in 2019. So we can see that Caterpillar have potential to generate income. Lastly is efficiency ratio of Caterpillar. Asset turnover. Caterpillar have increasing asset turnover from 2017 to 2019. It is from 0.59 in 2017 to 0.68 in 2019. The more higher asset turnover, the more better the company. Inventory turnover. The good inventory turnover is between 4 to 6. As we can see, Caterpillar have a good inventory turnover. It is because the Caterpillar inventory is between 4 to 6. Next is investment in financing for our project. We estimating that our initial cost is 800 million euro. It is equivalent to 897 million USD. And 70% of this initial cost are financing by the parent company. It is Caterpillar. and 30% was bank loan in Portugal. 80% of this initial cost are for office building and equipment, and another 20% is for other costs. Next is cost of debt. The total of cost of debt for this project is 2.2%, and then the cost of equity equivalent to 5.4%. And then component cost, WACC, total additional risk, and discounted rate. The WACC is equivalent to 7.6%, total additional risk equal to 2.04%, and lastly, the discounted rate is equal to 9.64%. Loan amortization, it is 10 years loan in bank in Portugal. It is starting from 2021 and will be end in 2030. 30% of the initial cost are bank loan. It is equivalent to 240 million euro. For the 10 years loan, the interest rate is equal to 55,684,522. And then the total paid will be 301,661,500. Growth projection. In 2023, we are estimating the growth rate of 40% from the total export of machinery industry in 2017. And for the 2030, we are estimating the growth rate is 54%. Cash flow statement. For the first year of this project, it is 2021, the opening cash balance will be 800 million euro, and the ending cash balance will be 323,876,633. For the last year of this project, it is 2030. The ending cash balance will be 9,213,982,052 euro. As we can see, for the 10 years, there's a positive cash flow for this project. Lastly, I will explain the capital budgeting for this project. For the first year, the free cash flow for this project is equivalent to 800 million euro. Net present value. The discounted rate for this project is equal to 9.64%, and net present value is equivalent to 4,472,056,314 euro. And lastly, the internal rate return for this project is equal to 41.782%. Compared to the cost of capital, it is 9.64%. So by that, we consider this project as a good investment for this company. That's all from me. Thank you.